Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
Well, anyways, I don't know if you understood that. I didn't really understand what he was saying, but the good news is that it translates to better mortgage rates. One of the things that mortgage rates have been battling for a long time, and the reason why they've remained relatively high, is because the Federal Reserve has remained committed to keeping rates where they are until we see inflation dip below 2%. We have not hit that 2% number. In fact, I think most recently it was 2.7% or maybe even 2.8. And so it doesn't seem like inflation is hitting that 2% mark anytime soon. But the comments that Jerome Powell made at Jackson Hole are indicating that the Federal Reserve is open to not only lowering interest rates, but maybe changing how they viewed inflation and how that's going to dictate future decisions that they make down the road. So for mortgage rates, this is really great news. We've seen some great market improvement toward the end of August. We're seeing the 30-year fixed rate continue to trend downward. Hopefully, we're going to get to the point in the not too distant future where we could see 30-year fixed rate mortgages below 6%, which would be a big relief to many consumers who are looking to buy homes or even looking to refinance out of those potentially higher rates in the 7% or above range that were given out during some of the more expensive seasons when rates were higher. I'd love to continue to be a resource, not just for mortgage news, but to be your guide and to be your strategist as you're making mortgage decisions, whether that's refinancing or buying a home. I would be honored to be a part of that with you. So if there's anything we can do, shoot us a message. I'd also love to hear your thoughts on where you think the market is headed and what you think the likelihood of market rates hitting 6% or below in the near future is.